Welcome to Trading Lounge and the US indices for Wednesday, May 25, starting on the S&P, and I've rearranged my count slightly into an ABC pattern rather than a WXY, and it counts like this with the A wave, the B wave, and then 1 and 2 here, and all of this being the third wave here, an A wave, a B wave, and a C wave coming back up just above the 4-1, and then wave 5 coming down. Now the other count for this is that wave 4 could be in here and wave 5 could be in here, because that's kind of what the Russell is telling me, but I don't think that's the case for the S&P, because we've got 3 waves to the downside. So we've got 3 waves to the upside, so an A, and 3 waves down for a B wave, and then up for a C. So basically an expanded flat correction. Yeah, so that's sort of what we're looking at, I think. I know that we're pretty close to where we need to be, but I know that we need to have another leg down. So just going into the intraday to have a look at that. Well, we're here. So yesterday we noted that we had 5 waves up here, so we were looking at this as down for wave 1 with an A and a B and a C, but I couldn't get 5. I mean, I couldn't get 3 waves out of this. You know, it sort of puzzled me a little bit. So wave 3 here with an ABC for the A wave, an ABC for the B wave, and then 1 and 2 and 3, 4, 5 here for the C, or 4, and then one more leg to the downside. That would make sense to me, and as an expander flat, because we took the low out here by, you know, that distance that we took the low out is what we kind of expect to take the top of this one out as an expanded flat as well. So somewhere at the 41.30 sort of area perhaps, but we'll just count as we go. And of course this low needs to stay in place at that point. Okay, so that's sort of where we are with that. And then we'll come down for wave 5, and that should be it at that point. And that would, all that would line up quite nicely with the sectors I've started to look at, and stocks that I've been sort of looking at as well. So I'm kind of comfortable with this. I could make a mistake. The other point is that we don't. You know, I think that what we'll try to do is that, you know, I mean, obviously there's day traders, but I also want to try to accommodate, you know, longer term traders in these things, not so much in the leverage department, you know. So I'll probably, when we get down to the bottom, this is the SPY, sorry I don't have it labeled, but it's just the 10,000 tick, so it's kind of like a daily chart, but not quite. So we've got an A and a B and a C wave down here, so we're looking for the same sort of thing here. And when we get down here, I think we'll start to use some of the sectors, you know, the tech sector and the energy sector and the consumer discretionaries and those sort of sectors. I think what we'll try to do, or what I'll try to do, because Alessio will start putting out trades when we get the new site done, which is coming along, but things take longer than one expects all the time. So I don't like putting dates on things because it just stresses you out. But yeah, so what I might do with you know, because I'm doing those daily stocks and I'm doing indices, well, I might as well apply trades to those, but I kind of want to do it longer term. You know, I want to try to do something that's going to suit myself a little bit more, because I'm not really a day trader. I mean, when I'm doing these charts, if I see a trade, well then I'll, you know, like I bought the SPY my time this morning, kind of on your close rather, and, you know, down at 3,900. So, you know, that type of thing. So, you know, I will day trade because it's entertaining more than anything else, you know. But I think, you know, what we'll try to do with the SPY and so on, the ETFs, because if this count is correct here, then we'll be taking out those tops there, and, you know, we'll be moving up at that point. So I'd like to sort of capture a lot of that. Yeah, so that's what I'm sort of thinking. we need to confirm this too. Once we get down here, with the S&P and so on too, we definitely need to confirm it. So we'll definitely need to see an impulse wave to the upside. Now we could get a very small position on the turn on the low here, and just leave all of this, because it's going to pull back, roughly 40% to 60%, or between 40 and 80% as it does. But it doesn't really matter. What will happen is that once we see those 5 waves here, something of this size here, then we can just buy back here anyway. So we don't need to go FOMO, see that moving off and get FOMO'd in and then get sort of whacked around the cheeks and and so on. So we can get something on the turn and we'll leave it, and we could take some profit on it. We get back, we can do a few of those, we can dance a little bit, but really want to capture the sort of and stay in the trend, in that instance. So that's what we'll try to do with the ETFs in these different sectors. Okay, so anyway, that's just the SPY. So and I'll probably do another video maybe on the weekends or something, once I get all the sectors worked out a bit, just do something sort of that's easy for me to do. But anyway, that's the S&P at this point. So I'll leave that at that for the time being. This is the NASDAQ, so I've rearranged the count for the NASDAQ as well. If you've watched the stock video, even though you may not trade stock and you just trade indices or vice versa, I think it's important now and again to have a look at both of them, because we're trying to figure out the ends here, for these markets. And we've been looking at the consumer discretionaries and the tech sector and so on. We can have a look at the triple Q here actually. So this leg down here for this here, I'm looking at it on the triple Q, and we'll also look at the tech sector as well. So looking at the B wave at the top there, this is how I counted it as 1 and 2, and then 1 and 2 and 1 and 2 here, and then the third wave and the fourth and the fifth for the third and the fourth, then the 1 2 3 4, 1 2 3 4 5 for the third. So looking at this as I've still got the old count here, just to because the NASI is the weakest, but otherwise an A wave, a B wave, and then it's got to get itself off the ground here for 3 4 and 5 to finish off this here, and then down for this point. But I could also put wave 4 over here and look at this as 1 and 2 still, and in this particular instance, because it's drop low. So we'll just keep an eye on it. Doesn't really matter. But down here, this is the one that interests me down here, this fifth wave of wave C here of wave 2. So we should be looking for a powerful move to the upside at that point. So I mean, even though I'm thinking this, we still got to prove it, So my conversation this week has been about looking for the low, and I need to do extra work and look around, and so I'm doing all of that. So I feel like I'm slowly getting it together in that instance. I don't have all the answers just yet, but yeah, looking at that, and this is the tech sector here as well, the XLK, and I think Apple holds about 22% of this, so Apple's important to this, of course, so yeah, I'm just trying to figure out this. I've counted this slightly different here because it's a better fit this way, but we're basically close to our target area down here, and if 130, then you know that it's the top of group 1, and there's always a bounce on group 1, that's just goes without saying. This is the medium level here, so we'll just plonk that in while we're here, and just gives us a bit of definition. It'll be some targets to aim for on the upside. So yeah, I've got to resolve this here, so I am working on it, and we're sort of looking around and getting it there. So the NASDAQ on the 2K here, maybe the 100, let's just check. So yeah, this is I mean, it's possible to have the low in, but it just doesn't count very well down here for that. So I really don't think that's the case. So I've got this wave 4 over here, and we could, I could look at this in a couple of different, I could look at it in a variety of different ways. But, you know, I am seeing the banks sort of push up. The Russell's pushing up quite nicely. The Russell may even have a low in it. JP Morgan may even have a low in place as well. There's a few things that are starting to settle in a little bit, you know. But anyway, we'll sort of get there, but we're sort of not there yet. I mean, even if this, like, let's say for an example, this is wave 1 here, and the NASDAQ is weaker than the other ones, and it may just, but this move down through here on the S&P is in 3 waves, so I'd assume that's 3 waves. But let's just say that we do push up here in 5 waves, and then, you know, there'll be the fact that we need to take out that top there, I think, and then move down. But if we just move down in 3 waves, for instance, well, that means that we can go long above here at that point. If we think this is 1, 2, 3, 4, 5, and we've got an A and a B and a C here, then we can go long above here if that pushes up through there. So we're not going to miss much, but because some stocks will be pushing up, you know, before others and all the rest of it. So, but I feel that we're quite close at this stage, so that's good. And the Russell kind of, I find a little bit intriguing because I can't seem to count it any other way bar this. I mean, it probably could. So I'm thinking there may even be a low in for this at this moment, you know, as, you know, the A wave, the B wave, 1, 2, 3, 4, 5 here. Obviously, if it was going to go in a bigger bear market, it would have to sort of rally up here higher. I can't remember what we were looking at this on. Was it? Let me just think about this for a moment. Yeah, I think this 5K will do the trick anyway. I mean, I had sort of bearish counts, but we could count it down as 1, 2, 3, 4, 5 here for C, and then 1, 2, 3, 4, 5 here for 1, and A, B, C for 2 here, and then 1 and 2, and then going up for 3, 4, 5. Now, I don't know if that's going to give me wave 3 up at that point, you know, up here for that, or we're going to have a wave C at that point. I don't know. I mean, this is what we've got to kind of figure out a little bit, you know. So, but anyway, as long as that low here stays in place, then this, you know, because that's a nice ABC pattern, it doesn't really get much nicer than that. And then up for 1 and back for 2, it didn't really breach the low here, so that's all, you know, it stayed in place there for that. So that's good. And yeah, let's just see how this plays out, shall we? I mean, it might move up to here and hit supply across here and pull back down because we are got lower highs here. I'm not going to trade it long. I'm just using it as an exercise at this particular point in time. So let's just see. But it may be a low in place. I mean, the other one I'm sort of looking at is Morgan's here as being a possible low in place, and that's been pushing up for a few days now, you know. So we're going to start to look at that on the intraday basis very shortly. Not all banks are like that though, yeah, so we're looking for lows. I still think some of the sectors need another low to be had in, and some may not, you know. That's what I'm thinking. So I'll leave it all at that. Thanks for tuning in. Cheers.